Thanks for coming to the last session. Congratulations, you have made it to the best talk. And also the one that is probably holding you back from beer and dinner. So I hope that this is one that will be very useful for you. So I guess I want to get a sense, first, how many people know about SET? Just raise your hands. Oh wow, okay, that's a lot. How many people have bought a SET or own a SET? Okay, a bit fewer. How many people here are building a company or working at a crypto company? Okay, and how many people are investing? Okay, cool. And who's interested in figuring out how to get more product adoption in general for whole space? Okay, so that's everybody, or a lot of people. All right, cool. So I guess the agenda really is two things. One is doing an introduction of SET, so catching everyone up who doesn't know too much about who we are and what we do. And then two, discuss a bit about some of the product decision frameworks that I use when I think about how to get more user adoption. Okay, so we are a protocol that makes it easy for anyone to implement a fund strategy. We also make it accessible. It is trustless as it's built on Ethereum, and which cuts out the middlemen and reduce costs. And since we launched in May, we have about $2.1 million of assets in our system thus far. Right now, crypto holders want to implement an asset management strategy of their choice. They want to be able to do it very easily. With a click of a button. They don't want to have to rebalance and monitor all the different indicators, and they want to do it with minimized taxes and fees. Our solution makes things dramatically simpler. Implementing a strategy yourself includes all those steps there, and with SET, all you have to do is pick a predefined strategy, or in the future, you create your own, and then you can acquire a SET with a click of a button on token sets. And once you have acquired that SET, you could put it in cold storage or put it anywhere else, and it would automatically rebalance while you sleep. And SET is built on Ethereum using smart contracts, so it inherits all of the great benefits of programmability. It's trustless and accessible, all these things that you guys already know about, so I'm not going to rehash. And some of the strategies that you can get today include the buy and hold strategy, which is a token that will rebalance into 50% Bitcoin and 50% Ether periodically. We have a range-bound strategy, which buys when the price goes down and sells when it goes up. And our latest strategy is a trend trading strategy, which implements technical analysis strategies as a token. Speaking of the trend trading strategies, that is the one that we launched recently and has been a game changer. It's the first time anyone can implement so easily a technical analysis strategy. It represents the only way that you can actually accumulate Ether, multiplying it from 1 to 3 or 4, not just getting 10% yield when lending it. And it's actually delivered alpha. Since it's launched, it's actually done 60% better than holding ETH itself. And what's really cool is that yesterday we just rebalanced the SET from USDC into ETH, and we did pretty much the biggest Dutch auction on Ethereum, which is $820,000 at less than 1% slippage. So it's really easy to get one of these sets that I just mentioned. You go in token sets, you get onboarded, you perform one click to get a set, and you can track it on our website. And really, what we're trying to do, on a very high level, our vision is to allow anyone in the world, whether you're a person, you're a robot or AI, to frictionlessly manage any asset using any type of asset management strategy. And the idea is that today we are offering technical analysis strategies and index strategies, but in the future we'll implement fundamental strategies. We'll in the future perhaps even do AI strategies. But the vision is that you should be able to implement any strategy that you can imagine. I don't think that asset management is just for investment professionals. It's about managing your assets, the things that you own. It should be able to be done automatically just by thinking it, or at least clicking a button. Today, we're starting with liquid Ethereum assets, But in the future, we want to be managing all assets of value. I think we get there by eventually managing all crypto assets. We think that many tokens, if they want to get the benefits of automated management or automated lending, will start porting over. So we see examples of that already with Wrap Bitcoin and TBTC, and we think that many other tokens will start migrating as well. And far in the future, I think securities and real estate and all other assets will eventually be uploaded onto the blockchain as well. And finally, most people think, okay, the user the total addressable market is pretty small right now. Right now, it's Ethereum users, maybe if you're very optimistic, 50,000 people. But I think that if we want to get this to billions of people, the next step is really to focus on exchange users. So getting users on Coinbase and Binance to perform their first smart contract interaction. Maybe then we try to onboard the Robinhood or the Square users, and then over time we may be reaching more and more people. And that's really the idea of SET and where we're trying to go. So kind of just a plug for the company we're hiring, and if you're a market maker, we want to talk to you to help kind of take down our auctions. Oh, question? Okay, cool. So that's part one. That's SET. I think the more interesting part is really kind of frameworks for DeFi product adoption, right? This is going to be a talk for builders, for to-be builders, and for investors as well, as we try to think better about how to frame ourselves as well as where we play in the industry, as well as how to make tactical decisions. So the first framework is kind of new product adoption is equal to value minus friction. So I think the takeaway really is that we can be optimistic about the industry and the dynamics of new technology and basically how you fit in as a company. And then also two, I want to talk about product requirements Venn diagram, which is a framework for how you make tactical product decisions, about what to build and how to develop a roadmap. So the first framework, like I mentioned, is new product adoption is value minus friction. So it's a formula which is essentially to get new users to adopt a technology, you have to build a product that delivers compelling value to users. And that value needs to supersede the amount of friction available. One company that has really done that well is Tesla. They had to somehow prove that electric vehicles are in every single way better than traditional motor vehicles. It has to be faster, sexier, safer, etc. And they also have to reduce the friction by building kind of a supercharger network. And they also made it easy for you to plug into your home. And I believe that we need to do the same thing for crypto. It also represents a new technology. And when you really think about it, in 2017, we had this dynamic where everyone that you knew was actually figuring out MetaMask, figuring out private keys and gas to actually send money to an ICO. And that was really because the perceived value of sending money to ICO was greater than the friction to actually get started, right? So that perceived value was doubling, tripling your money overnight, and the friction, people actually figured out. It was really surprising. But if you fast forward to today, things aren't too different from the friction side of things. We may have made some improvements, but it's relatively the same. In terms of value, DeFi products don't deliver that 2x dollar overnight. So the friction right now supersedes the value. But what's interesting is that over time, what we're seeing is that the friction is going down, right? We have companies that are making it a lot easier for people to interact with crypto products. Companies like Argent, hosted wallet solutions like Fortmatic are kind of abstracting kind of gas and transactions away. And we're also, as an industry, educating more and more people about kind of how to use crypto and what it means. On the other side, we have all these protocols that are delivering more value for users, right? You're able to do much more interesting things now than you were able to do a year ago. And I think the most powerful element of kind of the DeFi space is really composability, right? You have all of these really basic elements like lending, derivatives, stablecoins, oracles, and you can combine them to create much more interesting and value-generating products. So what we're seeing over time is that the friction is declining, right? Over time, the value is increasing. And over time, we hit parity, and then at some point, users start naturally flowing in, or new users, that is, start flowing in to, I guess, DeFi. And just to note, like many of you are familiar with DeFi products, so the friction may actually seem very low, but I just want to note that this is kind of a framework for like new user adoption, right? How do you get someone new on board? And one more note is that, really what's happening is we're kind of seeing the innovator's dilemma. You have like traditional financial products that are improving at a linear rate, and because of the composability and the open source nature of DeFi, it's improving more at an exponential rate. We're still below kind of the ease of use and the value delivered in DeFi, but I believe that at some point we'll hit parity and our value prop will like be an order of magnitude better like in the future. So going back to this, like I think many companies in DeFi in the space either kind of fall in one category. You're helping to reduce the friction. So you're like a dApp browser, you're like a hosted wallet solution, you're a smart contract wallet solution, making it easier for people to get into crypto, and that includes on-ramps as well. Or you're kind of focusing on the value side, right? You're building new interesting things that you can do on Ethereum. You're innovating, you're combining the elements that exist to do things you could not have done before. So I think this is kind of one way to think about where you play, but also like stay sane when everything looks really bleak right now. Like when everyone feels like we're in an echo chamber and we're trapped, like it's good to know that if we continue to do what we're doing, like we will get to better times. So that's framework one. The second framework I wanted to talk about is what I call the product requirements Venn diagram. So the thinking is that companies need to build products that actually get adoption, right? You need to hit certain milestones to get additional funding, or you need kind of enough time to hit profitability. And product development cycles often take months, sometimes years. And companies have limited runway, whether it's your money, your time, or effort. And building the right product for the market is really hard, because there's lots of constraints and limitations. The assumptions that we made in 2017 included everyone will adopt our products. 2, blockchain liquidity is abundant and everyone can trade with anyone else. People will learn to use our crypto products and regulators are friendly. But that is definitely not the case anymore. But a lot of people still live in that fairyland right now. I think the reality that we face today and that we have to build products for today is very different, right? Today, crypto is mostly full of speculators. There's limited liquidity on the tokens that exist. The UI UX is currently worse than that of centralized exchanges, and regulators worldwide are cracking down on ICOs and exchanges. We have to live in this reality. We cannot assume the left side anymore. And really, the way to think about it is that we are essentially kind of in a maze. There's this article by John Choi about the crypto idea maze. And basically, let's say the bottom left is where we start, and the other end is product adoption, right? Massive amounts of product adoption that gets you, to later stages and to the Holy Land. I think that there are companies that made it further along than others. Some of those that we've probably heard of for good reason include Compound and Maker. These companies have made it easy to access these products worldwide. They're simple and easy to use. They have a clear and compelling value for the users, and they have found a way to offer it legally as well. Other companies may have needed to pivot because they might have hit a dead end. Some of these dead ends might be regulatory, right? They cannot offer products in certain jurisdictions. For example, Veil, essentially offering kind of derivatives, and they can't do that in the US. Another example is, maybe your value proposition does not match the market needs. 0x focused on relayers, but it turns out what the market needs today is liquidity. Or your product might be too difficult to use. The example is Augur, where you have to download the client and then sync with it for many hours before you can even get started. And finally, technology could get in the way as well. If you can't build for the demand, then that's issue 2. And I think Dharma is an example where they had clearly a lot of demand for their product, but they could not scale their infrastructure to handle it. And if you are a company, you're that spaceship right there, and you are kind of at a place where you need to make a product decision, like how do we think about it? How do we be more like Compound and Maker and less like the other folks that need to pivot? And I think there are many naive ways to think about it. I kind of present 3 here. One way is to reason by analogy. So you can think like, okay, there are traditional financial products. We need to make the crypto version of that. I think that's a very limited way, as the problems you also inherit, right? You also inherit the bad parts of traditional finance. The other way to think about it is to listen to your users. Everyone says that. It's important. But I think that users are oftentimes good for helping you to figure out what the problem is, then produce the ideal solution. And the quote that I really like to kind of focus on is really Henry Ford, right? If I asked people what they wanted, they would say faster horses, not cars. And finally, the way you can also focus on technology, right? That's kind of the, if you build it, they will come mentality. It may have worked for Field of Dreams, but I think that you're basically shooting in the dark and working blindly on pure faith or trust. So I present kind of a framework for thinking about this, is what I call the product requirements Venn diagram. Essentially, it's a way to help you decide what is reasonable to build based on known factors. And some of these factors represent the circles kind of on the right. It looks like a Venn diagram. Factors are requirements that must be met before something can be built, right? These change over time, and they can be added as you consider more factors or realize what reality looks like more clearly, and you add another factor, right? And the intersection of all these factors represents, I guess, the product that meets all the requirements and makes sense to build. So that's really abstract, so I wanted to make it a bit more real. This is kind of the Venn diagram that we use at SET to think about what products we build, right? And this can actually be generalized to DeFi in general, because many DeFi companies also kind of need to consider the same factors that we do. And really, the one on the bottom is market demand. Do people want your product? 2 is technical feasibility. Is it possible to build your product without making too many trade-offs? Is it regulatory compliant? And then, is it liquid? Can you get in and out of your product, right? And you might think of products that might fit the intersection of a few of these factors. For example, we definitely considered building a basket of stablecoins. They were liquid. They were regulatorily compliant to offer to everyone in the world, and it was technically feasible to do that, but we found that there wasn't really that much market demand for diversifying across a number of centralized stablecoins, right? Maybe if Basis or a number of other algo coins existed, you would want to spread that risk, but we only really have one right now. But the one that kind of met all those criteria for us is like the moving average crossover set, right? So I think like finding kind of and figuring out like what kind of that intersection point is like a really important exercise that companies need to do and continue doing. So kind of honing in on this, like the first factor we'll kind of dig into is market demand, which is will people actually use your product? And when you talk to your friends or potential users, many of them will say your product is really cool. I like it, right? But like I guess the real question is, will they actually put money into it? And not just like 0.01 ETH, but will they put a significant sum into the product that you're building? And I think like for me, like one of the ways that you can think about building a product that will actually be used is if you build something that you will use yourself, right? What will you put your money into or spend money on? If you build that, that's a good proxy for building a good product. But if you want it to be a lot more scientific, what you can do is run experiments, right? So essentially, like in school, what you would do is you would create a hypothesis, you would run the experiment, you would get the feedback, you analyze it, and you repeat, right? And that's really what we did kind of when we launched token sets. Our initial hypothesis was index products will be used by many people to manage risk, right? We launched our index products, which is the buy and hold strategies. The feedback wasn't like overwhelming, so we knew it wasn't necessarily product market fit today, because in the past people did want diversification across a number of ICO tokens, but now it's really coalesced into Bitcoin and Ether. The feedback that we actually got was people wanted much more active products. People wanted products where they can take more risk and get more reward. So we revised our hypotheses into moving average products help people get yield. It helps them multiply their crypto, et cetera. And we launched the trend trading strategies, which started to take off. So in reality, there's actually many more steps in between. This is a shortcut version. It wasn't as straight shot as that, but I think this is a really good way to figure out where there is market demand for your product. Okay, so the second factor is liquidity, right? It's like, is it easy for people to get in and out of your product? And I define liquidity more holistically and more generally. It's not just, if you go on exchange, how much slippage do you incur when getting in and out, but also like the user experience. How much does a user need to know before being able to get in and out of a product? In addition to how easy is it, right? How many clicks does it take to get in and out of a product? And I think another one that's actually important is the number of venues. Like how many different places can you go? Like if our website shut down, can you still get our product? So I think liquidity is an important factor, and we actually spend a lot of time thinking about it. One, like in launching our sets, we think about only picking assets that have on-chain liquidity. So that's why we've only offered kind of Bitcoin, Ether, and kind of DAI and USDC in our products. In addition, we spent a lot of time thinking about how to make the acquisition process really easy for a set, right? We allow users to click one button, and that atomically sends Ether, that will wrap the Ether into wrapped Ether, that will swap the wrapped Ether into Bitcoin or DAI, and atomically mints a set in the transaction, right? On the right-hand side, you kind of see what the Etherscan kind of receipt looks like. There's 26 event logs that are going on. So we invest a lot of time to make this interaction easy. And I think that is one of the requirements for getting adoption is, and part of what I mean by liquidity. Okay, the third piece is technical. Is it possible to build your product without too many trade-offs? I think it's clear that we know now that crypto is a spectrum of decentralization. There's always some level of centralization involved, except for maybe something like Uniswap. But I guess can you do it without too many limitations? Can you actually build it, and can you build it scalably? I think that's really important. In addition, regulatory is also super important. Can you offer your product compliantly, and to what jurisdictions? Can you offer all around the world? Do you have to blacklist certain countries? What laws and regulatory bodies do you need to be aware of? I think that in general, this is not legal advice, but I think kind of if you are a new startup without so much funding, it is important to find some sort of lawyer, but at the same time, it's good to be frugal and do a lot of the research yourself because lawyers are very expensive. But in general, there's less risk as a rule of thumb if the protocol is non-custodial. So one, you don't hold any assets. Two, you're not taking any percentage-based fees, so you're not a broker-dealer. You're only dealing with commodities, so Bitcoin, Ether, USD, you're much safer than if you added stuff like BNB or MKR. And if you really needed to, blacklisting countries like the US is a good idea. If you wanted to get something out to market sooner than later. And of course, 0x has some good resources as well, but that is definitely I think one of the biggest pains of building a crypto startup is regulatory, and definitely represents a big hurdle to getting started at all. So yeah, when you actually start kind of applying this framework onto different types of products that you want to build, you can start building a roadmap and a decision tree. So essentially, each of these boxes represents a different factor, and you can see which factors or which assets or products you can build today. You can denote which products you want to build tomorrow, but might have some work to be done. For example, like the purple diamond is like, we still need to work on R&D on the technical side of things, or there might still be some regulatory uncertainty, or there's not enough liquidity in a certain component. But you can start building this roadmap, and I think it ends up being a very powerful tool to confidently decide what to build and something that makes sense, that validates hypotheses, and allows you to rapidly run experiments. So yeah, in summary, basically the two frameworks are, new product adoption is equal to value minus friction, right? Know where you play and be optimistic about where the industry is going, because it's very easy to be sullen. And then two, product requirements Venn diagram, right? It gives you a framework for making tactical product decisions on what to build and how to build a roadmap in the future. So yeah, that is all I have. That's it. If I have time, I'll take questions.
Do you?
I think I do, yeah.
Of course. Questions?
If there's any.
Well, I actually have one myself.
Okay.
So, for me, one of the appeals in crypto in general is that people can manage their funds themselves. In that way, there is no central, governance system in that sense. So, asset management, a company like you could potentially extract that value from the customer, if that makes sense. But this is not the case because everything actually happens in the blockchain. But I guess this is not clear for many people. So how do you go about marketing all of this in that sense? I think you touched a little on that, but maybe.
So marketing which part?
That maybe if the company is not there tomorrow, the funds will be.
I see.
Is the case, but
yeah. Yeah, so I mean, in the beginning, most protocols and projects will bootstrap, adoption, so it's pretty centralized, and the goal is to decentralize it over time. So I mean, this is one of those protocols where it's built to be as architected to be as decentralized as possible. Like many other DeFi protocols, don't be surprised, but everyone kind of manages a multi-sig at the moment, where the company generally has access to make upgrades or changes as needed. The idea is that over time you kind of pass that over to some sort of DAO or some sort of decentralized autonomous organization. The other thing that a company can do is, if the company becomes feature complete, where you don't want to make more upgrades, you can just throw away the keys, right? So there's no more. So yeah, the thing is these are smart contracts. When deployed, they will keep running. Of course, they require if you have a set that's a continually rebalance, someone needs to call that function. So as long as that is done, then to an extent, if our company disappears tomorrow, it can continue to operate based on the market forces.
Thank you.
Hey, just a quick question on privacy. How do you stop kind of the internals of a set being gamed by kind of other bots or users? If I can see it's going to rebalance when it crosses MACDA 20% or 20-day moving average, how do you stop that being gamed if you can see the total value of the set?
Yeah, I mean, you can definitely anticipate a rebalance happening. So you can definitely trade ahead of it. Right now, the sizes of the sets aren't necessarily enough to move the market. But I think when we're 10x, 20x, 50x bigger, that will probably be the case. So there are a couple of things that we are thinking of. We're thinking about one, maybe randomizing when the auction happens. We're also thinking about elongating the length of the options or splitting up the auctions. We're also thinking about launching more sets that are very similar to the large sets to split up the demand of when the auctions happen. And yeah, we're also thinking about different auction curves, right? So right now the auction is linear across a specified period of time. Maybe we can kind of have that react to any kind of bidding activity that happens. So we're definitely aware of potential, front running or kind of trading ahead of, the rebalance activity, but that's actually really normal for ETF companies, right? This has been done in traditional stock world, and there are solutions for it, which is maybe the ETF company is rebalancing not all at once, but over the course of 2 weeks, right? So these are tactics that we can also employ when we grow in size.
Yeah. Could I go through?
Hi. I'm curious, now you've found some, to a degree of product market fit. Prior to product market fit, was there a direction that SET might have gone in, and knowing what you know now, like that would have never happened? So like I guess an early direction that you invalidated.
Yeah, so no, we actually launched, I don't know if I have a slide for this. Let's see if I do. Okay, so I actually have this. So basically a year ago, or more than a year ago, we launched TokenSets V1. It was meant to be a proof of concept, but we knew it had many holes and issues. One is like, we had all these assets and it wasn't necessarily regulatorily compliant. So our lawyers basically, after we launched it, told us to take it down. That wasn't great. Also, it was really hard to mint a set. For example, like we had a set that was like the top 10 ERC20s, and the users had to like bring all 10 tokens into their wallet and then like mint one, right? So there was like too much friction to get anything started. So we stopped doing that, and we basically focused on developers for a while. We built a developer platform. We built kind of a JavaScript library. We built kind of documentation. It was really beautiful. We went to all the hackathons. But what we found was that, one, there weren't any serious developers that can build on SET. Like SET is like pretty complex. And the other thing is that it was a pretty like tough funding environment. Like the analogy we used was 0x, right? Like they were able to get a whole bunch of layers building on SET or 0x. So we thought, okay, maybe we can do the same. But that wasn't the case. And the devs that would be building on us would also have the same regulatory problems that we did kind of in the past. So I guess today we figured out kind of the regulatory side. We spent a lot of time investing and make it easy to mint, and we're able to kind of launch the product that we have today. So I guess we would skip all of this, of course, but nothing is ever like so smooth, right?
Do you have any plans to allow users to create their own sets?
In the future, yeah, we will. We actually, internally built, a set creator tool where you just click a few buttons and you can launch your own set. We at one point, even thought about prioritizing that feature, but I think as of now, we'll probably be kind of like launching the sets ourselves for now, and then in the future, we'll be generalizing and letting people create their own. I mean, right now, if you're a developer, you can create your own set right now, but there's no kind of like user interface where you can just click a few buttons and make that happen yet. It's interesting. A lot more set questions than there are framework questions, but it's good.
Hi. So I'm curious about if you consider SET as a platform right now or actual a product for end user, because I think also looking to your previous slide, you were showing that you started with this idea of a platform for developers, but now you were explaining that actually is moving in a direction of a consumer. So I'm curious to know what's your plan for the future. So is SET, let's say, a protocol that is obviously permissionless right now, but what's the future in your perspective?
Yeah, how we think about it is that right now we're focused on building token sets in the full stack, like end-to-end experience, right? We build the protocol, we have APIs, we build the front end. But over time, and that really is to bootstrap like the ecosystem, right? I think many of the protocols that have gotten like some success have kind of built the full stack experience. They have to prove to others that their protocol is useful to build on by building on it themselves. And oftentimes, the developers building a protocol or a team building it has more imagination of what to do and what's useful than other people. So now that we're getting a little bit more success, there are more developers that are organically actually building on us, which is interesting. So I think at some point, the long term is that we are kind of the protocol and the platform for other people. And I think a good kind of example of how that's happening is with Compound, right? They started building kind of full stack experience, but now they're actually transitioning to focusing on developers now, spending less time on the UX and more on helping others build on top and help through the distribution.
Okay, thank you.
I think, that said, I think one of the most challenging or unthought of pieces is really like how you can make token economics work for everybody. So like if you have a token, like or how do you extract value as a protocol, and how do you make sure value gets passed on to the layer above you? I think that's something that hasn't really been totally figured out yet.
So I'm reading on your site here that you currently take no fees for creating sets. So just thinking about it, wouldn't it be nice to have a flywheel kind of effect where you take fees and you can then finance more development? So could you explain what was the decision to take no fees?
Oh, absolutely. I mean, I think one of the biggest things that we know to generate viral growth is really if we can do affiliate fee, right? If someone has a good idea to create a set, right, they should get paid if people mint that set, right? And they tell everyone about it, right? If there was a way for us as a company to benefit, and for that creator that came up with a great idea to benefit too, that is amazing, right? I think right now there's no fee. Part of it is regulatory, right? You cannot take percentage-based fees. You need to be a broker-dealer, so that doesn't work. I think the out that most people are thinking of is essentially something like a DAO token. So we can do a DAO, kind of like MakerDAO, and that will be used to make upgrades, set parameters, or do things that are good for users. And hopefully you can use that value that as a currency to pay companies or that build on top or do distribution or something. But I think it has to be thought through more, and I'm definitely happy if you are a crypto economics person to jam on this with.
Looking at the chart, it looks like steps. Is there anything special happening last week? Or in the other, let's say, periods which are reflected by the steps?
Yeah, so this was yesterday, I think. So what happened is we just rebalanced. So our set oscillates between USD and ETH, right? People don't want to buy the set or put money into it when it's in USD because they're essentially selling Ether into USDC, right? And it's we're using Kyber, which is good, but people don't want to pay the slippage when they transact. In addition, they want to keep ETH, right? So when we rebalance into set, there's a few things that happen. One is allowed people to just wrap their ETH into the set. So people started wrapping hundreds. Some guy did 1,000 ETH, kind of just overnight. And the other thing is that we also, people saw kind of the returns they missed out on, I think. This strategy actually surprisingly worked. We back tested it, it performed well. And then now that we're front testing it, it's actually playing out. So I think if you got the set in the beginning, you'd be up 60% versus ETH, which is pretty crazy for a month and a half. But then again, this set performs when you have the bear markets, right? When you sell at, when before things crash, that's when it capitalizes.
Any more questions? Yeah. Hi, thanks for your talk. I guess you considered adding a set with CDAI and Ether. What needs to happen before you can add that? And I guess mainly liquidity, and how do you think we can get there?
Yes, it is liquidity. We already spec'd it out. We have a path forward to make it happen. So basically, the biggest request from all users is, why can't I put a CDAI and earn interest instead of using just USDC or a stable coin, right? It's pretty much a no-brainer, right? Everyone has independently, hundreds of users have independently come up with the idea. Everyone thinks they're a genius because everyone's thought of it. So I think there's a few things. So one is, I think it's purely liquidity, right? There's a lot of work to do to allow users to mint a set with CDAI in it. So for example, let's say you have Ether, you want to mint a set with CDAI. What would happen is that we would take the ETH, wrap into wrapped Ether. We would swap the Ether, wrapped Ether for DAI, and then we would wrap the CDAI into DAI into CDAI, and then mint the set, right? That all happens in kind of what we think is a transformation pipeline. So we need to build that. We don't have that yet. That's a lot of engineering work on a protocol level. In addition, during the rebalances, the market makers may not have CDAI on hand. They usually hold DAI, right? So, or receive DAI. So we also need to do the transformations to let market makers trade in one click to transact DAI instead of CDAI, right? So I think, so that's two. And then three, we we are also need to generalize the managers a bit more. So essentially we have, this is kind of the architecture of like how the rebalancing set works, right? Essentially the manager, like right now, is only able to deal with a stable coin as kind of the stable collateral. So we need to like do a refactor of that piece of code to make it work. So I think those are the three things that we need to do before we can launch CDI. And yeah.
No more questions? Okay. Thank you, Felix.